Welcome back to HumbleFx. How are you guys doing? Okay, please, if you are new to this channel, kindly subscribe to this channel and hit the bell notification so you get notified once we upload new videos. And once again, I want to appreciate you guys. I want to thank you for how you have been there for us, how you've been supporting us. Okay, at least we have reached 600 subscribers. Thank you very much for your work. And for those that are not sharing, please keep on sharing this video to people. Let us hit 1,000 subscribers before this month comes to an end. I know we can do it. All right, and when we reach that level, I'm going to be releasing to you guys awesome stuff that's going to give you real cash. All right, today we are discussing an important strategy, very important strategy that you can use to make the market. I call this strategy the boom and crash killer strategy. The killer strategy. All right, you're gonna see how it works. If you know about this strategy, it costs $200. This strategy costs $200. I am not the founder of this strategy after all, but the strategy, they sold it at $200, but right here I'm going to give it to you for free as a platter of gold. So guys, make good use of this strategy so that you will see how efficient it is. All right, yeah, like I said earlier, if you are new to this channel, guys, hit the subscribe button. Please hit the subscribe button. Also hit the bell notification beside the subscribe button and turn it on so you get notified once we upload a new video. This is a simple and sweet strategy you can use to trade the market successfully. Like I said, this is HumbleFx. That is what it is. Okay, guys, let us get to how this market work. Before we talk about the settings, let us see efficacy of this market. Yes, this is a strategy I've been using to make my money. All right, so this is how this stuff work. It's not a Please guys, don't rush this video. Watch it to the end. Don't fast forward it or to find the settings first. First of all, understand how it works. Watch it. Don't skip a second. Don't skip a second so you don't miss any important information about the strategy. Don't make that mistake of fast forwarding the video so you get the settings and go away. Don't do that. Always learn to understand the market, understand the setup before you even talk about the settings. Okay, now let us talk about the zoom level. The zoom level right here, I got this question so much that I always get the question day by day. Right, the zoom levels for this market is, if you are on the lowest zoom level, okay, the lowest zoom level, you zoom it out once and twice. This is the zoom level you're using. This is the zoom level you'll be using for this market. So this is called, is it zoom 3 or zoom 2? I don't know what to call it, but from the lowest zoom level, you zoom out twice. Okay, that is the zoom level we're using for this strategy. Okay, now how does this market work? How does it work? Our entry point is when this line here, when the green line for this is actually boom 1000. So we enter when this green line right here touches this point, and at the main chart there's a crossover at these lines here. These lines here cross each other. All right, so remember that the blue line is the Ichimoku. The blue line, the thick blue line, is the Ichimoku. But when we are entering is when there is a cross on the other market. All right, when there is a cross in this three line here, the alligator. When there's a cross, when they cross the green in the alligator crosses down the other two below, and That is first our first confirmation. Then at this window indicator as well, the green is crossing, is already at the overbought level. All right, so where is our entry now? Our entry is the crossover in the main chart, and the cross that is here is our entry. We should enter market here because it's already at the oversold curving downward, and this already crossed over, so we enter it and we'll take profit at the level of 0. Here's our take profit, guys. Here's our take profit when it touches 50 to 50, or these two line here, the red line here and the green line here, come to meet at that 50. We take our profit. Okay, but if you want to be on the first, you want to be on the safe side, you don't want to encounter loss, okay, you can just enter there and take something like 5 to 10 minute candles, and you are out of the market. Okay, now let us check it out again. You see it here, it happened here as well. There is a cross, the green line at the oversold reached that point, but where this market crossed over is somewhere here. It's crossed here while the market is already curving downward from the oversold, so we have to enter the market, sorry, overbought level, guys. Have to enter the market somewhere here. All right, and we'll take our ride till the market, the green and the red, cross each other at the 50 level, or we take profit after 5 candles or 10 candles to reduce the risk we are taking. Okay, it happens always at this point. As a crossover also, look at it here, it's crossed over here and the green line is already at the oversold level. We take our profit, we take our entry, and we'll exit at the 50 level, or we take profit at our leisure. But watch out here, guys. This thick black line is the dynamic support and resistance level. Okay, so we guys should take note of it. It is very, very important, though there's these things met, but we have to respect that level. We should take candles and we'll exit before it touches this dark black line. It is the 200 exponential moving average. It is so bad that market spikes are along that side. Look at what's happened here. It spiked even though there is a crossover. Look at, there's a crossover here. We should have entered market here, but look at it, reached at this level and it spiked up here as well. It crossed not long ago, it spiked up, so we should respect that level. Look at it, it's never crossed its backward until now. All right, so you guys should respect that. This dynamic strength index, this is the 200 the 200 EMA, that is exponential moving average, is very, very important. Okay, now let us check out again. Look at another cross here. It's like a crossover right here, even though at this point there is no cross here because that is not the real cross. But we can actually take this trade and take few candles, not up to the 5 candles we are taking before, because it is risky one. Like here also, there's a cross here, that's why we don't take much candles here. Only one of these is, only here is confirmed, here is not confirmed, so we can take risk 2 to 5 candles here and go away. Same thing applies here, only here are confirmed, here not confirmed. Okay, so we can, this is where the market actually crossed. Look at what's happened here. There is a overbought level right here, and the market about to cross a spike happen, so actually it's crossed over right at this point. This is where it actually crossed over, but what happened, there was a spike, so this is why if it spiked against you, maybe you are trading the market and a spike happened on you, what you have to do at that point is check the higher time frame. We are on the 1 minute time frame right now, so for you to know the market trend, okay, check the higher time frame, and see if you are to hold the market or you are to exit the market. Let's check 5 minute time frame first. 5 minute time frame. At that point of the market, let us mark it out. This is where the market, where is the stuff? Right here, Abby. Let us mark it out with a box so that we will see if we should have hold it or not. This is where the stuff happened. Now check the higher time frame, 5 minute time frame. Let's go back there. Now you see where that stuff happened. There is a spike in this place. A spike happened in this place. But if we zoom it down, zoom in level, we see that it is actually an uptrend. But guess what? This spike that happened have not reached the next level. They have not reached that resistance level. Let me draw the line so that you get what I'm saying. This is the nearest level here. The nearest level is here. So a spike happened here on our 1 minute time frame. So we should exit if this spike has actually crossed this level here. But because the market is not crossing it, we take it as a pullback, that it is coming down. Look at what happened. It spiked but did not reach or cross over that our recent resistance level above. So we can take the risk and hold down for a while. But if another spike happened again and it crossed over this level, this little red line here, we should exit the market in loss and take that loss before it blows your account. Okay, but look at what happened. It took pull back and came down to give us profit. That's what you should do when it goes against you. Check the higher time frame. Check the higher time frame so you know whether to hold it or take your loss. All right, now let us check out other pairs, boom 500 and all that. Now here is boom 500. This market has been crossing right from this point, but I should not take this market. If I'm taking this market, I'm taking it based on two conditions. First of all, let me go to my zoom level. First of all, the first condition I'm taking is that the market is below the 200 EMA. It touch it. Look at the spike happened. Yes, the spike happened. It's already at EMA. So that's why I say it's not even good to take it. I was trying to say that it is risky to take it. If you can risk your money, you could have taken like two candles here. At the market has touched the EMA here already. At that spike, you should have taken your two candles out of it, because the EMA will actually draw it down a bit before another spike happen, and you see three candles formed before a spike happen. All right, so but it's not needed. It's not good to do that because it can give you a drastic loss if a spike catch you in that level. Now the boom is going to shoot up, so you don't hold it except you are confirmed, because the crossing is already crossing upward from here. That is, the green already is crossing down here and the cross is already happening here. So a spike is what we should be expecting from there. Okay, now let us check out for the normal selling of a boom. Look at it here. There's a crossing here. There is already an overbought level here. So we can enter the market from this point, because the two condition is met. Crossing is here and already at the overbought level below the 200 EMA. Note, not a must it should be below 20, not a must it should be below the 200 EMA, but it is good. It is more profitable if it is below the 200 EMA. All right, a cross happened here. Our first confirmation, and the cross already at overbought level here. So we should take profit at the level of 50, or we'll take few candles to avoid more risk. Okay. See another one here, crossed over here at the overbought level and below the 200 EMA. We'll take our trade. All right, look at it. Happens most time. It happens all the time. Look at it again. Crossed over here over bought level below the 200 EMA, and we enjoy the market. Now look at this one happened above the EMA. That's why I said you can also take trade above the EMA. Look at it here. A cross happened in this point already at the overbought level right here. So we should enter the market at this cross. At this cross, even though this market actually reacted to the 200 EMA. Look at it. It actually gave us a reaction to the 200 EMA by spiking on it. But already we have seen our trade here. Take our few candles and go away. Right, this is how awesome you can use this market. I've used it today to make my profit today. I've used it to take I'm using a small account to trade today. I've traded today with this strategy. Okay, and you too can trade with it and make your profit. All right, so it's not a hard stuff. Now let us check out the settings. Let me not delay you again. Let's check out the settings of this market. Settings is so simple. The first of all, uh let's check out the settings. Or the video has been long lengthy right now. It has been lengthy. Let me check it out. Let me drop it in the next video, please, guys. I'll drop it in the next video. In the next video, I'll drop the settings for this market and explain the Ichimoku that is in the mancha, so that I don't make this video too lengthy. All right, the Ichimoku also have its function that is doing. I will explain that in the next video. Okay, have a great day, guys. This is HumbleFx signing out.